In this episode, Wayne Jett and I continue in our series, The Fruits of Graft, Great Depressions Then and Now. We pick it up from 1980 and carry it forward to about 2008. Thank you for listening. We had fun. Hope you do as well. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and we continue the series that our friend Wayne Jett has graciously agreed to go through with us. So there's a series. We're picking it up about where we left off in the last episode to about 79, 1980, Paul Volcker, Jimmy Carter, Milton Friedman, Ronald Reagan, inflation, high interest rates, and how Volcker was going to manage the interest rates through the money supply. And so if we could just pick it up from there, Wayne.
All right, let's do that. Well, those days lasted in terms of the money supply management by the Fed under Volcker until the Mexican banks screamed to actually the Mexican government that had borrowed from the Wall Street banks to develop its oil industry, screamed that the monetary policy of the Fed had crashed the oil price. I believe that Volcker was intentionally causing a deflation, not intending to help Reagan, of course. Quite the contrary. Even the interest rate cuts that Reagan was able to accomplish that gave economic growth was squelched by a dollar that the money supply was so deprived in quantity by Volcker that my friend economist that I was working with had told Volcker if it goes below $300 an ounce on gold, we'll have a failure of banks. And so Volcker said Milton Friedman didn't think so. He refused to reverse provide more money in order to get the gold price up. And as a result, the Mexican banks told the Mexican government told the New York banks that they were going to default on their loans, and that, of course, resulted in a scream by those banks to the Fed to add more money, which happened, and we had recovery from there. My point in going into that, to the detail I have, is that this was a time somewhat like today in which the wrong guy was in office and was not really cooperating with the powers that be, and the powers that be preferred a recession. But nevertheless, the Fed was a very active player.
You know, if I can interject here, Wayne, that brings back lots of memories. I haven't had a conversation about the Mexican banks, and they actually defaulted on a lot of those loans around that time. Wasn't that one of the times that they defaulted? The peso was revalued. Did that go on about 80, 81?
It was a very troubled time, we'll say, for the banks, but the Fed accommodated the banks perfectly, changed its policy, provided funds. As a matter of fact, they've provided exactly enough funds to pay off the banks. I mean,
what a coincidence.
Yeah, to bring the banks up to date as far as their Mexican loans. So he didn't provide any more money to the economy than absolutely necessary to assuage the banks. But that was the kind of thing that Volcker was completely erroneously credited, so-called, with breaking the back of inflation. It was a terrible monetary policy the entire time. But nevertheless, that's the kind of reporting we get, both from academics of the universities and by the press. They make famous whom they wish. Volcker was a Chase Manhattan, that is a Rockefeller man from the word go, and so they were carrying out Kabbalist, as I would call it, global Kabbalist policy. And of course, he had been the one to usher in the day of the floating dollar.
Yep.
That is, cutting the dollar completely away from gold. And therefore, subjecting the savings of American people and anyone using the dollar to severe attrition, that is, stealing of the value by reducing the value of savings. Same thing that's happening today.
On a daily basis, every day, daily.
Very much so, very much so. And it's that fiat currency that gives this tremendous power to those who own the bank to take the value of savings out in the form of free money issued to themselves.
And they're mercantilist. They're Kabbalist capitalism. It's not even true capitalism. It's crony capitalism. The first crony capitalist friend that gets to touch the money, wins.
Right. The term crony capitalism preserves the idea that we're really capitalist when we're not.
Exactly.
It is a term for mercantilism.
Right.
That is economy for the kingmakers.
Big government projects, high tariffs with now high taxation.
Right. And so here we go. We finally ditch Volcker and get Greenspan. Alan Greenspan became Fed chairman. And in the past, he had, to some extent, sung the praises of a gold standard and the need for that kind of measure on the value of the dollar so it could be certain and stable and guaranteed. But once in as the Fed, the first thing he did, the first weekend that he was Fed chairman, was to give an interview, I think, to Fortune magazine, saying that it really wasn't important to him to maintain the value of the dollar. The following Monday was the 1,000-point crash in the Dow, I think it was, and he immediately reversed that course and started making assurances that the dollar's value would be maintained and so forth. And we went from there. He followed a monetary policy that was restrictive for some time, but the price of gold moved back up from where it was, and by the early 90s, we had gold in the range of just below $400, sometimes $420 an ounce, thereabouts. And it remained fairly steady in that regard during the early 90s. However, that from the mid-90s, thereabouts, I don't have the chart exactly in mind, but basically in the mid-90s, the gold price mysteriously began falling again. And my goodness, by the time we got to 1998, we had a gold price in the dollar down to something in the 250 range. And that caused a crash in the oil price again. Most people wouldn't, after the surging oil prices we had in the early 2000s, most people would forget that oil fell to something like $10 or $11 a barrel in 1998.
I remember that. They were capping wells all over Texas. I mean, right and left. It was ugly.
The reason I mentioned this severe deflation is this was secretly done. It was not talked about by the Fed. The Fed denied it. My colleague at the time, well, it wasn't at the time, but later told me that during that time he was a friend of Greenspan's. They communicated from time to time, and he specifically communicated with Greenspan, the Fed chairman, on more than one occasion, telling him that you've got to loosen up on the money supply. You're going to crash commodities. We've got a severe deflation already. Greenspan stopped communicating with him and wouldn't discuss it at all, which basically clearly means to me that he knew what he was doing. He didn't want it discussed. He didn't want it admitted to anybody, and he didn't want this particular man to know about it because this man wrote to the public pretty prolifically.
Are you speaking of Jude Wanniski?
Yeah, Jude Wanniski of Paul Economics. I later started working with him in something like 2003 or thereabouts, and that was the time period during which he related many of these experiences to me. But since Greenspan wouldn't speak with him in the late 90s, he went to the White House directly and said, you've got to alleviate the monetary policy. We've got a severe deflation in the dollar. And what was happening, very important to understand what that does, particularly starting with businesses that are dealing in industrial goods and spot markets and things of that sort, where their prices are priced on a daily basis of their products, whether it's cement or concrete or various industrial supplies, oil and so forth. And of course, at $10, $11 a barrel for oil, the oil companies were having to shut down wells, having to go out of business. They couldn't pay their bills, so forth. So it was a difficult time, and the warning seemed to certainly be urgent for them. But what happens in the economy as a whole is that when these basic industrial corporations that are traded in the stock markets, when they stop being profitable, obviously their share prices start falling. They become unpopular. Investors move their money out of those industrial companies, and they put them in things that are going up in order to stay ahead in the market. That's exactly what happened then. All the basic industrial businesses were losing stock price, losing market share, and so forth. And what was going up, of course, it was high tech. And it was in my belief, it was a deliberate manipulation of the market to do exactly what it did. It built high tech. It went up and up and up and up during the late 90s. As the basic industrials were going down, the Southeast Asian tigers, economies over there that had been so prosperous, producing commodities and things of that sort, were crashing. Their economies were failing because their commodities prices were having to drop in order to sell anything at all. We had some so-called emergencies of that kind with the failures of those governments or economies. But we come around to early 2000, and March of 2000, the signal is given. And I'll tell a particular story right now as to how we mark that tech crash that began in the first week of March of 2000. It was, coincidentally, we didn't learn until 2007. March of 2007, we learned that the SEC announced in writing a settlement of a major case that had been unpublicized before. It had settled a major case against Goldman Sachs, the largest of the operators, of course, on Wall Street. The case that was announced settlement in 2007 was one in which, if you read between the lines of what was written by the SEC in its announcement, you can calculate approximately the date on which the misconduct began. My calculation of that was by the end of the first week in March of 2000, exactly the time that the tech crash began. If you calculate by reading between the lines, again, a very ambiguous statement, but one that you could calculate when the misconduct ended. It was about the end of the first week in October of 2002. Now that is, in my estimation, precisely the extent of the tech crash of 2002. What was the misconduct by Goldman Sachs that was described? Well, they just began a practice of allowing their hedge fund clients to directly use the trading platforms that ordinarily Goldman Sachs was responsible for directly inputting orders. But they turned it over to their hedge fund clients. So the clients placing the orders didn't go through Goldman Sachs. They went directly to the trading and did the trades themselves. And what did they do? They started marking all of their short sales as long sales. And so they were selling short, which meant at that time there was an uptick rule. So by saying it's a long trade, you don't have to wait for an uptick. And number two, you don't borrow the stock. And number three, you don't deliver it. So all of the sales they did, those hedge funds through Goldman Sachs for those more than 2 years, 2.5 years of the tech crash, were basically, they were naked short selling. That's the kind of thing in which you basically make counterfeit shares, as many as you want. You sell them as long as you want in order to drive the stock price down. You recover, you cover your shorts at the bottom, and if at all, and then you do it again as long as you want.
Wayne, that sounds like the current paper gold market. The current market in gold manipulated by paper. That sounds. Yes. It's almost like you can overlay that blueprint, that methodology into the private equity firms. Driving these companies into bankruptcy, taking them over, then bringing them back public, and financing the deal, getting the attorney, all the legal work. They're all working together, and they just do it over and over and over. It's the same concept, maybe a different area.
And I might say that settlement in 2007 with Goldman Sachs for that activity, that conduct by Goldman Sachs as responsible for those trades that entire period. SEC allowed Goldman Sachs to say, well, it really wasn't their fault. It was their customers that were doing this wrong. And so they shouldn't have done it, but it really was not. They fined them $7 million. That was, I'm sure, more than covered in the first hour of trading of the first day of the crash.
Right.
It is ridiculous in terms of the absurdity of the idea or the thought that the Securities and Exchange Commission is anything other than a rubber stamp for the big operators of Wall Street. They simply are led around as a collar on a chain, as the obedient puppy of the big traders, the big operators on Wall Street, the big banks. So the SEC, as I said in my book, The Fruits of Graft, and showed as a historical basis, it was conceived from the beginning in 1933 when it was created as a shield for the major players on Wall Street.
The SEC.
Right. That's right. As a shield to protect the big players from any prosecution for financial crimes. And yet, for so many years, the SEC has been touted as the hallmark of enforcement to make our U.S. financial markets the fairest and most transparent in the world. If anything, the opposite is the truth. I hate to say that, but it is the case.
That's every government plan, Wayne. Whatever the stated title is, whatever the stated objective is, the truth is 180 degrees opposite. So that's
at every point that I've been able to determine, our government has been controlled in every respect by this globalist cabal of the major thieves of the world, of history, that have stolen so much, their wealth is beyond measure. I believe that's exactly what we're dealing with now in our current financial crisis, our current governmental crisis. I've written an article just recently on my website to the effect that the social unrest, so-called, that we've been experiencing in the United States, in the major cities, the attacks, the terror, is a globalist attack, very much in the same nature as the insurgency into Russia in 1917 particularly, I meant. In 1917, when the Bolsheviks were insurgents put into Russia with major financing from international banks. We have evidence of one of the major officials, operatives of the globalist cabal, who testified in 1938 that yes, he indeed had been transmitting funds into Russia on behalf of the globalists to finance the Bolsheviks, to to kidnap the Tsar, and to eventually murder him and his family, to take the parliament in Russia and conduct a bloody civil war, dominating that country for 70 years as a so-called communist government, when it was fully and completely controlled by the globalist cabal that entire time. In other words, the same financial powers that control our Wall Street.
You know that communism cannot exist without central banks. Just like world wars cannot happen without central banks. So, and
in that regard, I would say one of the current events, pardon me, presently is the report that I'm sure you've seen, that the Federal Reserve has been taken into the Treasury Department by the president, and is the chairman of the Fed is now reporting directly to President Trump and taking orders. And some of those events are certainly worth discussing at some point in time, but we're still back in the period just after 2000, the tech crash, and then the gradual rebuilding from $252 an ounce, which was the low price in gold, and therefore the severest point of deflation of the dollar, the increase in value of each dollar, so that it crashed commodity prices. They finally started adding money, but between 2002, October 2002, and 2008, in that period of time, the largest amount of money added in any 1 year, my recollection is it was $45 billion, which in today's money wouldn't get them through the day.
Jump change. That's half a day's pay right there.
Right. And And yet, all through the time and years after the 2008 crash, supposedly the whole thing was blamed on housing as having so much money available from the Fed that housing prices went through the roof and so forth and so on and so on. It just was not true. There was increasing housing prices, particularly in major markets. But frankly, it was, in my opinion, as a result of factors that we've been more aware of just in these recent years, that China was beginning to use the money that it was accumulating from the U.S. and its tremendous sales into the U.S. economy, using the dollars to finance people to come over here and buy properties. And yes, they had so much money that price was hardly an object, and they were buying lots of real estate, housing among them, but commercial and industrial and other real estate, real property. Not financial instruments so much. And that was what was being experienced in those times. But again, we get to 2008, and the Federal Reserve at that time, it was more intricate than what I described for the tech crash as to the way that was brought about. But it was to be blamed on too much easy money for mortgages and too many people getting mortgages that they couldn't afford to repay. And it was all these deadbeats that weren't paying their mortgages and so forth. And everyone started running for mortgages and the mortgage bonds and so forth. Well, what was really going on then, Enron, I could go back and talk about that just a little bit. We know from more recently that Enron was set up and was put out of business by a phony lawsuit filed by the Justice Department, accusing them of financial fraud of a nature that was not a criminal offense under any statute at that time. But the same guy who ran the operation to go after President Trump in the Russian investigation, Russiagate, was the same attorney who put two different criminal statutes together into an allegation of a complaint against Enron, filed a criminal complaint against Enron. Enron was put out of business by the time that hit the press the next morning, and so was Arthur Andersen, the accounting firm, and the biggest and most respected accounting firm was the firm for Enron. It was put out of business without a trial because they also filed that criminal case against them, and they were put out of business overnight. No trial on a trumped-up charge that was intended. I think what happened in the aftermath of Enron was a takeover of the Enron business in providing financial vehicles for buying oil futures and things of that sort. That business was taken over by a combination, as I recall, of Morgan Stanley and Goldman Sachs. Became a very big business for them. And they were also both involved in the mortgage crisis very heavily. It was a sophisticated setup using financial derivatives that basically was a way of shorting bonds. You could buy insurance on any bond, any corporate bond. Even though you didn't own it, you could buy insurance. And what happened when you bought an insurance derivative on a corporate bond is that the seller of that derivative would hedge the sale that he had just made of that insurance policy by selling that corporate bond, by selling it short. And of course, that is exactly the thing that was being done. Those bonds were being sold short. Every time a derivative was bought, the bonds were sold short. And of course, that immediately drove the price of those bonds into oblivion. There was a new bond index set up in Britain, offshore from the United States, but obviously covering all the bonds in the United States. And of all things, the index of that bond announced the specific bonds. They only had about 24 bonds in the index to be the monitor, supposedly, of what's happening in the whole mortgage industry.
That doesn't even create a diversified portfolio, does it? 12.
Oh my goodness!
and then talk about moral hazard. It's like there's no morality in that whole construct.
That's correct. Yeah, that's exactly right. Now I'll go into that just a little bit further. That index, the ABX index is what it was called, and it was also set up by the same combination, Morgan Stanley and Goldman Sachs, set up in London, had certain 24 identifiable bonds. In order to make that index go down, all you had to do is buy derivatives on those bonds. And that's exactly what was done. As soon as those bonds were known, you buy a derivative on them, an insurance policy. Your insurance policy requires that the seller of the insurance policy, in effect, is going to short those bonds, naked short. And so obviously, as soon as that bond index, ABX, was set up in London, it went live, I think, in March, and immediately began going straight down. And of course, that began the run against mortgages, against the mortgage bonds, against all mortgage bonds, even ones that were fully AAA. People, the press and those discussing it would make these inflamed news reports about how could anything be AAA rated when it's with these bonds of people who can't pay their mortgages, these people who didn't even deserve a house and so forth.
Yeah, sure. Blame the customer, right? And then blame the rating agencies whenever you're creating this paper market that's so easy to manipulate.
There also was adopted a new accounting rule by the CPAs.
Oh, yeah. Mark to market.
That said, you have to use the most recent data and you have to run the value of your mortgages as if it's really cash in hand or cash lost. You have to take that out of your profit and loss statement on a quarterly basis. And so anyone who owned mortgages or those mortgage-backed securities all of a sudden was bleeding red. All of that was set up, and therefore they began targets themselves of that short selling. The Federal Reserve itself was definitely in on it. As far as
per usual, I mean, that's nothing out of the ordinary there.
The way I was in on it is that they began raising interest rates at a time when it really wasn't called for, but raising interest rates for the purpose of what? Their purpose was to reduce inflation by putting people out of work. That is the thesis of what's called the Phillips curve, which is an outrageous Keynesian economic theory coming out of Britain, or the logical sources, I'm sure, espoused in Harvard and so forth, that if you put people out of work, they can't buy as many things, and therefore prices won't go up as fast. It is that Phillips curve theory and policy used by the Federal Reserve, I would go so far as to use the word satanic.
Oh, yes.
You just can't get any more evil than to take the view that you can control money's value best by making people starve so they can't afford a house or food. That really gets me riled. And,
listen, I completely agree. As a matter of fact, since you brought that up, it's like my personal opinion, what I have come to believe over, 57 years with my feet on the ground, 30 years in the financial world, 16 years practicing this infinite banking concept that I learned from my mentor, Nelson Nash, and just being observant, trying to pay attention. I'm not sleepwalking through life. I'm a student of history. I'm a student of economics. I'm a student of my profession. I'm a student of my faith. These people that rule the cabal, however you want to term them, I mean, they're of the lineage of Satan, in my opinion. They're the children of Satan. You can't do what they do without hating your fellow man. It's evil, satanic, no question. And we're just semantics. This is pure evil. There's no, I don't think you can hate your fellow man any more than they do. All you have to do is look at what they've done throughout history. And we're just really talking about the last 100 years or so in the financial world. So
right.
I agree with you.
And we are experiencing right now so-called pandemics that just happen to come out of laboratories. They just happen to originated in the United States and got incidentally shipped over to China with people who could no longer work in the United States because the U.S. laws had made it unlawful. But U.S. National Institutes of Health federal funds just happened to follow that work over there and fund the laboratory work in China on that same laboratory, on the same virus. And now the entire country gets shut down on it. We have our invasion on behalf of so-called racial unrest that in large part, again, is produced and financed by the same globalist cabal that announced back in 1901 its intentions to annihilate, to eliminate, to exterminate, to poison blacks, dirty-skinned whites, Jews, yellow skins, red skins, anything of the sort that they did not want to be their servants, wiping out the entire middle class. That was their expressed intent in 1901, written in English, and the author of which was immediately invited to the White House of Theodore Roosevelt, now on Mount Rushmore, I might add, as the honored guest. And on the arm of Margaret Sanger, the abortionist and founder of Planned Parenthood, a nicely sounding organization that basically deals in the death of unborn children. And
blood sacrificed to Baal, in my opinion.
Right. So there we are. That may be enough to cover today.
That's pretty full.
I'm not sure how long we've gone at this point, but I think that's about a half hour. And we can take it up another time, or we can go on if you wish. No,
I like this. I appreciate the time that you carve out of your busy schedule. And, we've covered a lot of ground, taking it, where did we get up to? We get up to really 2008 in the mortgage debacle that was created. Yes. So we'll pick it up from there the next time. All right, great. Okay. Well, James, I thank you very much again. And certainly if your listeners, I'm sure your audience is growing. If you haven't heard me say so before, let me recommend that people who are willing to read, a far better way to learn what I'm talking about is with my book. It's hardback, it's sewn bound so that it doesn't fall apart. It's not just by glue.
because the information in it has never been reported in another book. It shows how the Great Depression was created on purpose and by whom and what exact acts were done in order to make people starve to death in the United States and elsewhere in the world, and by the highest officials of the U.S. government. And it brings it up to date, certainly through 2008. It was published in 2011. But as amazing as it is to me, at the time it went out, I could not have forecast that we would actually have a president come from a place outside the global cabal, as we did in 2016. And I might add, in my opinion, in the very nick of time, in order to get us out from under and to actually stage a counter-assault against this globalist cabal of kingmakers that have ruled the world, that put insurgents into Russia, the other great Christian nation, and killed 60 million Christians or so during 70 years of occupation. It was a vicious occupation. People still here in America are still told the Russians are communists. They drove the communists out, whatever they call themselves now. They have thrown out the Bolsheviks, and I think many of the leaders came here, just as the Nazis came here after World War II, and were put into places that the globalist cabal could use them here, and we're suffering from it. We have suffered it from it all these years, and we have a chance now to really do something about it. I think that's underway at this point, even though things look bleak at times. But $25, go to my website, classicalcapital.com, and please get your copy, and I think you won't regret it. Thanks for having me, James.
Thank you. I appreciate you. And he's running low on his stock, so you better get there and get your copy while you still can. I'm just saying. Okay, Wayne.
Thanks, and look forward to our next discussion. Thanks for having me.
I as well. Thank you, sir. Have a great day.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.